Newgen presents ET Studios Digital Compass Season 2 in association with ET CIO. Building the Modern Tech Stack, a series of video shows that deep dive into some of the low-code solutions that power end-to-end automation at an enterprise scale. I'm Shilpa Ratnam, and in today's episode, my esteemed guests are Deepak Sharma, President and Chief Digital Officer, Kotak Mahindra, and Mr. Sunil Pandita, Vice President, India and South Asia, Newgen Software. Hello and welcome.
Thank you.
Hello,
Thanks for inviting us over.
Thank you so much for coming, and we really appreciate your time. Now, the world is moving fast, and you need a modern tech stack that can not only keep up but also thrive. The localized sequential automation needs to be replaced with a modern automation approach, as the same old will not fit in this brave new world. Engaging your customers throughout their journey requires not only omni-channel engagement, but also powerful process automation with deep integration to back-end applications. In that context, low-code platforms help provide better customer service through tools like real-time updates, lower delivery times, better interaction, and targeted user feedback. Unlike legacy systems that may be restrictive in nature, low-code platforms are accessible to everyone and are critically valuable. In fact, technologies like low-code have helped businesses protect against technology churn. Low-code platforms empower us to build long-lasting solutions that can be updated easily. Now it's time for my guests to share their valuable insights. I would love to start with Mr. Pandita. How does Newgen 1 differentiate itself in the low-code technology landscape for banking? And could you share a success story where Newgen's low-code solutions have helped a bank achieve its goals more efficiently?
Thanks for having me, Shilpa. I think that's a great question to start with. If you look at low-code as a continuum, and you look at citizen developer-centric applications on the one side, and you look at high-performance applications which are meant for mission-critical operations on the other side. What is very clear when you dovetail this with banking operations, which are fairly complex, what the banks need from these low-code applications is giving customer experiences to their users which are as good as what they're used to from a Uber. They want to ensure that the operations they run help them optimize and save on costs. They want to make sure that whatever data inputs they get as part of running these operations, as part of these customer insights, they're able to continuously use that for driving innovation. So when you look at the complexity of this, then saying that low code is meant for only simple applications is kind of trivializing it. Newgen 1 is a business-centric low-code application which is meant for mission-critical applications, which is built for change. And change is very important in the environment that we live in, because the business that you work in today, that's going to change, which you can't foresee. It's built for speed and agility, and your go-to-market times have shrunk drastically. And the third, it has to be built for scale, both for scaling out as well as scaling up. The other important part of what you do with the Newgen 1 platform is it is able to leverage your existing system, whether it's the core, whether it's the legacy systems. It's able to derive insights with a low-code based AI model that we have, and help you, push that input back into those journeys to give an experience which is great. And finally, it's cloud ready. To give an example, we work with most of the banks in India. This is a bank where we have been working for close to 20 years. So we future-proofed them by starting with their account opening journey many years back, which was a first at that point in time. And we subsequently moved. They leveraged us for their retail loans and various types of retail loans. And today we run the most comprehensive trade finance solution for that bank, and all this built on a single low-code platform, which evolved over a period of time.
Well, that's quite a success story. Thank you so much for sharing that with us, Mr. Pandita. I would love to ask you, sir, now, how difficult or easy is it to work with both legacy and modern architecture? Now, banks deal with a lot of legacy, and Kotak Mahindra Bank also acquired ING Vysya Bank in 2014. So there's always a challenge of technical debt.
I think unlike other countries in the world, India is fortunate that our banking system is pretty modern. Even then we keep saying there is legacy because now the tech obsolescence is so fast that even if something is 5-year-old, you start calling it legacy. So I would first correct that the understanding and definition of legacy is changing fast enough. Purely because I think we went from a monolithic to a microservice-based architecture to building it for the cloud, and now we are talking of low code or no code. So I think every 5 years we do see that there is a need for one to go back and relook at code stack. You cannot change everything fast enough, but yes, I think the way we look at it is we continuously work in a hybrid environment. So there are some applications that does not require to be modernized at the equal speed as probably the others. But as and when we do pick up new stacks, we do look at it that it is omni-channel, it's cutting across multiple product. There is a ease of development. It's linked based on microservice architecture. It's built with cloud native functionality so that you're able to scale up and scale down. And I think this is a journey that in my mind will continue where both worlds will coexist. Some part what we call legacy, but I would call it still monolith, which goes through your traditional development model, which is waterfall, versus the agile models. And now we are talking about the whole, the citizen development model, which is largely where the power goes not just to the developers, but also the people who are going to use these applications. So I think these are fundamental shifts that will continuously keep happening. And with that lens, I would say we can keep defining what is legacy and what is modern.
That's very interesting perspectives. Indeed, a lot of people believe that legacy systems need to be phased out. But you, as you rightly pointed out, now whatever is even 5 years old is legacy or vintage, as it's called popularly in technology. So you believe that instead of phasing it out, we can all coexist going into the future.
Yeah, so I think the way it's looking at it is phasing out just for the sake of phasing out is not necessarily important. For example, most banks are running with core banking solution for a decade. We may say, no, we need something better, but the question is if it's working and it's working reasonably well, do you have a rationale to phase it out just because it's been there for, say, a decade or a longer? So I think one needs to take a very objective call to say what part of technology stack needs to be modernized faster. So for example, anything that's customer facing, what we call as an experience layer or an orchestration layer, which enables certain things to move faster, especially when the business, employees, customers, they need a faster turnaround. I think that's where a lot more modernization is happening at scale and speed. A lot of back-end components, unless they are really broken or they cannot be scaled up, or probably they cannot give you the APIs that you can consume to build solution faster. There is still not that rip and replace everything culture is there. So one is taking those careful bets and prioritizing what needs to be replaced, what needs to be upgraded, and what needs to be maintained, but with some amount of improvements.
All right, so it's a very nuanced outlook, and thank you for sharing that with us. Now, Sunil, in the context of hyper-automation, what role does Newgen play in streamlining banking operations?
Yeah, so, but before that, what Deepak rightly mentioned is the need to modernize every 5 years. And and that's the reason why a lot of our customers are today looking at future-proofing. Coming to hyper-automation, so we look at hyper-automation as a combination of various technologies, starting with process automation, and we build that using our industry-leading BPM engine, which has important components which orchestrate your complex journeys. There's a very robust rules engine which is used in various functions for credit decisioning and so on and so forth. So that's a core component, and of course in the last few years there is robotic process automation which has gone into the platform to make sure that you are automating the mundane tasks. Now that's one piece, but in the last few years AI has really taken the center stage. So various, and our approach to AI is also basis low code. Fundamentally what we say is our AI platform is going to work on your data set. So we're not going to come with a cookie cutter approach and say that this is the model, use it, because it doesn't work for a lot of customers. So that AI combined with our the core tool is used in credit decisioning, is used in the next best alternative for customers, is used in risk scoring, is used in fraud prevention. With that said, on the integrations piece, which is the third component of hyper-automation layer, again, very important. And, we spoke about legacy and back-end applications. Some years back, that probably was the primary integration for all the journeys. But today, integrations start right from the point of origination, identity, getting identity verification, your PAN, your, MCA, leveraging your fintechs, leveraging the India stack. And those play an important part in orchestrating a journey which is very seamless. So your ability to have worked with those fintechs, worked with those India stack, which is available at scale, we are in a position today, for example, to tell which API from which fintech works well. Right? So that completes the journey, and obviously, from a customer's point of view, it is seamless experience. He doesn't really bother what's happening. It's a frictionless experience for him, whether it's on mobile, whether it's on any desktop that he's trying to interact. Now, all this has to happen within the guardrails of risk and compliance. The platform has to take care of this. So this is what broadly hyper-automation is. But additionally, what Newgen does as part of hyper-automation is we have this contextual context services product, which again is an industry-leading product. What it does is it provides context as part of the customer journeys, which is very important, and that context has to be available at the time that you want it, especially in a hybrid working environment. We're looking at high velocity content, high velocity processes today. So that contextualization of that content becomes very important. And finally, the ability to have a very robust customer communication engine, where you're talking to the customer at every point in time. You're communicating to them, hey, we have received your application on WhatsApp. Okay, this is the next step. Customers want to be kept informed what's happening to their loan application. So all this helps you streamline that process, give a fantastic customer experience, but tie it very closely your mid office and your back office. So that kind of gels extremely well, giving an experience to the customer and bringing down your cost of acquisition of a customer, cost of servicing a customer. And that's predominantly how we define hyper-automation as.
So, and how would you define hyper-automation in banking, having worked with it?
So hyper-automation is combination of various tools that you put together. How do we connect RPA with cognitive, with OCR or optical character recognition, to the predictive text mining, to the workflows solution and automation, to embedding it with the low code and no code. So moment you start to combine multiple tools together to find that there is an easy way to prototype, test, develop, deploy, test things, and provide a greater agility and control, because as processes keeps changing, organizations also want the flexibility and the control of how quickly can the processes be automated. How easy is it to integrate with different underlying systems? Or how quickly can some of the journeys be tested for A/B testing, for automating the back-end and operations. So as long as you're using multiple tools at the disposal, embedding it with what I call it as an AI, because their ability to understand the patterns, predict what are the outcomes, create those scenarios, it reduces the percentage of failures. It also provides greater control, as I mentioned, of using the predictive learning models while building automation. And I think this is the next phase of what intelligent automation has become, what we call today hyper-automation or intelligent automation.
So I also want to quickly touch upon the compliance, the data compliance norms, and they keep changing as well, right? How do you work with hyper-automation in that context?
I think for financial institutions, it's not a bigger challenge, because financial institutions deal more with customers' personal identifiable data, which is the first-party data. First-party data is typically the data as a financial institution you get either from customer or you derive through various transaction and the customer interactions that you have. You're not bringing in necessarily the second party and the third party data. But of course, with now the personal data privacy bill, wherever you are bringing in a second party data, like say a GST data, and GST data is say getting used now to monitor your loan or the end use of funds, or probably if you are giving a credit against the invoice, then these are all coming through a consent-based architecture. And as long as one is able to store the consent in a manner and the purpose for which this was obtained, and customer can get to see that what is the end use of the data that he or she has provided. I think financial institutions, I would say, are more prepared to manage it, because when GDPR came through, I think already the Indian institutions have gone and made their systems GDPR compliant. But yes, for other industries, I think they'll have to do a lot more work than financial institutions.
That's very interesting indeed, sir. Would you like to also elaborate on that, sir?
No, I agree with what Deepak is saying. I think the financial services industries have had a head start because of various factors, including GDPR becoming important. So most of the infrastructure that financial services companies have, banks have, is works in a very secure environment. The chances of a data leakage happening there is very minimal. I think on the other side, what the banks are grappling with is how do you make sure that any data breach that happens from the customer, whether it's related to phishing or wishing. So that's one area where the banks are working on. As far as the personally identified information is concerned, or consent architecture is concerned, or your auditability of what's happening, I think the tools today that are available in the industry, including what we provide, take care of all those things fairly well.
Good to know, sir. Now, banks have multiple departments, functions, and businesses. What areas and LOBs does Newgen work with in large banks?
Great question. So pretty much everything. Banking is a big part of what we do, and in India we've had a head start of close to 20-25 years of working with all the private sector banks, all the public sector banks. So whether it's related to external processes or even internal processes, we cut across all those. So if you look at from a journey point of view, from front office, mid office, back office, we encompass all that. LOB perspective, we take care of assets, we take care of liabilities, and a lot more. So if you look at liability side, the simple account opening is very different in a country like India. A millennial opening an account in Mumbai is very different from someone opening an account in Bharat, right? Where you still might need an assisted journey. So your ability to adapt to those journeys and still give a near STP or a DIY kind of an experience to the customer is very critical, and that's where the hyper automation layer takes care of that. You move to the asset side, starting from retail, secured, unsecured loans to mortgages, then slightly more complex, which Deepak mentioned, SME and MSME, which is big. If you look at MSME, that's a big sector for India today. There's a lot of supply chain financing happening there. There's a lot of credit which is getting pushed to MSMEs. There, the credit decisioning is very different from the rules that you formulate is very different, and we're moving from asset-based to flow-based lending, including GST, what Deepak mentioned in those. So that increases the complexity. Then you move to corporate finance, commercial finance, where you have things like monitoring the portfolio over a long period of time. Then what can get more complex than agricultural lending, which is again a priority sector, push from government. And imagine doing agri lending, various products from KCC to gold loan in an STP or a near STP, right? And some of the journey. So that really, it can't get bigger than that when we talk of lending. Then trade finance, very complex, very complicated processes. Being able to do that in a manner that for both domestic as well as international trade, you're able to give a very different experience to an importer or an exporter who is wanting to open an account in a place like Surat and wants his LC quickly because India is focusing a lot on exports. So that ability for centralizing trade, for trade processing, for trade intelligence, again, which the banks want, and obviously the integrations and security aspects related to trade. That's the other part we do very well. Plus, we see a lot of focus on service request management across various functions of banking, right? That's again another area where we see a lot of focus. So you know, pretty much everything from the liabilities to the asset side to trade to supply chain management, co-lending, payment hub. We pretty much operate in all those LOBs across various banks.
That's a lot of expertise, sir. Thank you for that comprehensive overview. Now, Deepak, in your experience, what are the key factors that banks should consider when evaluating low-code technology solutions for their operations?
Oh, great question. I think I would say that we are moving from low-code now to no-code. So again, the question is, there is always something new that comes around, right? I think some of the stuff that banks are looking at is where all do you want to apply the end use of low code, no code. And I think the ease of using the kind of components that it comes with, the ease of running what you call is the plug and play, the developer friendliness of, are there widgets, is it easy to use it, ease of integration with your core systems, ability to do the testing at speed. So all these items I think banks are looking at while evaluating. But having said that, I think banks are looking at low code or no code not just from what I would say is the lowest hanging fruit, which is the HR application or employee application or operation or backend. But now there is a lot more of this is happening for customer journeys. So for example, if you are building an onboarding journey, now it's quite possible that different customers respond very differently. You want to drag and drop certain field, or you want to change the order of those field in order to see that whether that really makes sense. So I think the ease of deploying multiple version of that for different customer journeys, customer segments. So the user friendliness, both from developer sense and also from the customer, and finding that how these can be applied at scale for complex applications. I think that's where banks are now more interested.
All right, sir. Thank you very much for that. We'll wrap up the discussion there. I would love to thank the two of you for your insights and also your valuable time. We really appreciate it. And please stay tuned to the Economic Times to stay ahead of trends and technologies. Thank you for watching.